All right, let's get right into it. Today, we're taking a deep dive into one of the most talked about, most debated stocks out there right now, Rezolve AI, ticker symbol RZLV. And believe me, this company's story has it all. We're talking dizzying highs, absolutely crushing lows, and a future that has investors split right down the middle. And that whole debate, it just got a lot more intense. Because on Friday, January 2nd, 2026, the stock did this. It just exploded, ripping higher by nearly 12% in a single day. And look, this wasn't some quiet little drift upwards. No, this was an aggressive, high-volume surge that made everyone sit up and pay attention. And when you dig into the numbers from that day, they really tell a story. The stock closed at 287, just 3 cents off its absolute high for the day. And it did that on massive volume, over 19 million shares traded hands. Usually with weaker stocks, you see people selling off into the close, especially on a Friday. But here, we saw the exact opposite. It really felt like the buyers were digging in, holding on for something bigger. So that leads us to the million-dollar question, right? The whole reason we're doing this explainer. Was that huge pop just a temporary blip? You know, a classic dead cat bounce designed to suck in hopeful investors before pulling the rug out? Or are we actually watching the very beginning of a real, fundamental turnaround story? To even begin to answer that, you have to understand the backstory. We have to look at the expectation, the narrative that's been hanging over this stock for the better part of a year. And for a lot of the early investors, that narrative is all about pain. This quote from our source material just nails the sentiment perfectly. Rezolve AI went public through a de-SPAC, which is basically a merger with one of those special purpose acquisition companies. And like so many other de-SPACs, it just couldn't live up to all that initial hype. What followed was a brutal, relentless sell-off that just punished anyone who believed in the story early on. And I mean, the fall was just staggering. From a high of over $8, the stock completely collapsed, bottoming out at just over $1. This created a huge community of frustrated bag holders, investors who are still way underwater on their position and, understandably, are deeply skeptical of any good news. So the whole bear case is built on this painful history. The arguments are pretty simple. This is just another failed SPAC. The technology is unproven. Some even call it vaporware. And any little price jump is just a trap, an opportunity for all those bag holders to finally sell and get out, which will just push the stock right back down. But what if that's all rearview mirror stuff? Let's flip the coin and look at the counter argument. Because there's a growing belief out there that the company trading today is fundamentally different. I mean, totally different from the one that fell apart back in 2025. And this is the real tug of war we're seeing in the market. On one side, you have retail investors who are frankly traumatized by the last 12 months of pain. They're driven by that emotional baggage. But on the other side, you have these huge institutions that seem to be quietly accumulating shares, looking forward at the next 12 months of potential execution. And the bull case isn't just based on hope and dreams. It's built on some pretty solid developments. We're talking major strategic partnerships with giants like Microsoft and Google. They've also made acquisitions like Crown Peak that are already generating real revenue. And maybe most importantly, public filings show that some of the smartest money on Wall Street, hedge funds like Citadel and Alkeon, have been buying the stock. And then you have this little ingredient, which could make things explosive: the short interest. Because of that whole bear narrative we talked about 17% of the company's entire float, that's all the shares available to trade, is being actively bet against by short sellers. This creates a really tense situation, a potential powder keg, just waiting for a spark. And that's what sets the stage for a potential short squeeze. Here's how it works. If the stock price starts rising fast, all those people betting against it, the short sellers, start losing money. They're then forced to buy back shares to cut their losses. But all that forced buying just adds more fuel to the fire, pushing the price even higher and creating this powerful, rapid upward spiral. Okay, but a powder keg needs a match, right? A short squeeze needs a real catalyst. So what's the actual technology here that could light the fuse? Let's talk about the company's big vision, something they call agentic commerce. The big idea here is to completely change the way we buy things online. I mean, think about it. For the last 20 years, everything has been based on search. You type what you're looking for into a box, you get a million blue links, and then you have to do all the work. Rezolve thinks the future is all about your intent. Just look at the difference here. On the left, that's shopping today. You search, you click, you filter, you add to cart, you check out. It's clunky and it's a real pain, especially on a phone. Now look at the right. That's the promise of agentic commerce. You just tell an AI agent what you want. I need size 10 running shoes under $150. And the AI does everything else. It understands you and completes the entire purchase for you. This isn't just about making things easier, it's about removing all the little friction points that make people give up and abandon their cart. And really, it all comes down to this one simple, powerful pitch. Just think about how many times you've been on your phone trying to buy something and you just give up because the process is too annoying. That is a billion-dollar problem, and that's the friction that Rezolve AI says they can solve. So you have the bears with their story of past failures, and you have the bulls with their vision for the future. But this whole thing isn't just some philosophical debate. The entire market is now laser-focused on one specific upcoming date that could finally prove one side right. And here is exactly why that day is so important. Right now, the company's market cap is hovering just under $1 billion. But there are some pretty strong rumors swirling that on January 13th, management is going to confirm an annualized revenue run rate of over $200 million. Now, if that turns out to be true, the stock would be trading at less than 5 times its revenue. For a high-growth AI software company, that multiple could be seen as incredibly cheap. The market doesn't quite trust the numbers yet, but it's waiting. It's waiting for that show-me moment. Now, before we get too carried away, we have to be crystal clear about the risks here. This is absolutely not a safe bet. If the broader market takes a nosedive, a high beta stock like this, one that's way more volatile than the average, will probably be one of the first things people sell. There is huge execution risk. Management has to deliver on these promises. And as our source puts it, this is a high-octane vehicle. It can drive really fast, but it can also crash really, really hard. Which leaves us with the ultimate question. On January 13th, and in the months that follow, which story is the market going to buy? Will investors stay hung up on the emotional baggage and the trauma of the past? Or will they look at the data, look at the partnerships, and buy into the company's future potential? The answer is going to determine whether Rezolve AI becomes a turnaround story for the ages or just another tech trap.